Hi, it's Stephen Vincent. This is part three of the BullBear Traders update for Thursday, May 19th, 2011. We're going to look at technical charts now, and this is the S&P 500 to NASDAQ 100 ratio chart. And this is basically bullish for the market when it's falling because you want to see the NASDAQ 100 outperforming the S&P 500. And even for most of this period since March of 2009, in fact, it has. But recently, it's broken out of its downtrend channel. It's gotten up above the 50-day moving average, and it looks like it wants to take out the 200-day moving average after having tested it a couple of times. So it's hard to say how much to make out of that, but there's certainly not something that you want to see happening. And this is the NASDAQ 100 to Dow ratio chart, and this is bullish for the market when it's moving up, and it has mostly been until what, February, when that correction started. When I say the correction started, and it's been trending down. It's below the 200-day moving average. The 50-day moving average is crossing over the 200 with the price below the 50 and the 200 right now, which is pretty bearish. And this is the S&P 500 to the total Treasury bond market index, and it's been in an uptrend channel, as you see here in green, and it made a higher high after the low in September of 2010, and since then, since February again, that date in February, it looks like it's making an A, B, C correction. Three waves down for A, B, and now it looks like it's rolling over here, making lower highs and lower lows, and it's below the 50, below the 20. The 20 is crossing below the 50. So it looks like it really wants to correct stocks against bonds. And you've got a threatened break of this trend line here as well. Now looking at the bullish percent index since February, it's been in decline. It's making lower lows now, even though the market is kind of grinding higher. The percent of stocks that are showing bullish point and figure charts are still declining. The NYSE summation index has been in a downtrend. It's been testing that downtrend recently, but looks like it's rolling over here. Today it was down even though the market was up, and the same thing for yesterday. It was down even though the market was up. We have the NASDAQ summation index, which also was down both of the last 2 days, even though the market was up. It's been downtrending pretty strongly since February. Looks like it's really ready to roll over here. NYSE stocks above the 50-day moving average also made a lower low recently, even though the market's grinding higher. Divergence since February again. NASDAQ stocks above the 50-day moving average are below the 200, the 50, and the 20-day moving averages of the indicator, and made a lower low recently. And NASDAQ stocks above the 200-day moving average is now below its 200-day moving average, with all of the averages rolling over here. It's made a lower low. Also, same thing with NYSE stocks above the 200-day moving average. The NYSE advanced decline volume is challenging the zero line. You can see that this blue support zone has been critical support and for intermediate term declines, and we're not even in a decline, but it's been declining down here, so it looks like it's ready to roll over and break down below this support zone. And the NASDAQ advanced decline issues is showing similar behavior, making a lower low here, even though the market is grinding higher. So technically, the market really looks like it wants to roll over here and break down. These are the indications, together with the charts, together with sentiment, which remains very bullish, that indicate to me that chances are very good that we're about to see a decent-sized decline. So I will be keeping you posted.